The Dow is now down 1,035 points. We are getting an indication that this is not entirely the Federal Reserve. In the last couple of minutes, Donald Trump has told Fox News he is, quote, totally against the proposed continuing resolution bill that has just been floated by Congress. And a lot of people haven't had a chance to read it. It's more than 1,700 pages. But that spending bill is not sitting well with the president-elect. Again, please keep in mind that the House is controlled by Republicans. So this is engendering a lot of Sturm und Drang at the moment. And considering we do see a big drop here, we do see the NASDAQ down 648 points, S&P down 163. So maybe not entirely driven by the Federal Reserve saying the economy is strong, so only 2 rate cuts next year versus 4. Joining me now with $4.73 trillion in assets under management, State Street Chief Investment Strategist Michael Arone. Michael, a couple of moving parts here, but at the moment, let's stick with the markets and this reaction. Would you be recommending people picking up some names on discount at this hour?
I absolutely would, Liz. I think that investors need to take a giant step back and realize that Chairman Powell isn't the Grinch that stole the market Santa Claus rally. And in fact, what did the Fed do today? They said they acknowledged that the economy was stronger than they expected, the labor market better than they expected, and the consequence of that is it's going to take a little longer for inflation to come down, and it will take fewer rate cuts to get there. At the end of the day, I think this is a buying opportunity and an overreaction by markets to this piece of news.
Okay. Do you think in the rearview mirror this will look like a good buying opportunity?
Potentially. I do think that the risks are, and you've been highlighting, that real rates accelerate beyond a certain level. So 4 3/4, 5% on 10-year Treasury yield seems to be that level. But I think we're hitting a ceiling. I think it's an overreaction. And as a result, I think that inexpensive parts of the market that should benefit from a stronger economy, some of the trade protectionism and Trump policy next year, like regional banks, like small caps, and certain technology companies are positioned well, and now you can buy them on sale.
Okay, the market is spooked, folks. We've got the VIX, the volatility or fear index, up 50% right now. That is a very big move at the moment.